There's still a lot we don't know about Mitt Romney, but thanks to some shoe leather reporting, we're beginning to learn some stunning information about Romney's financial maneuvers. Today, the Boston Phoenix broke the story of Romney's multi-million-dollar ties to a Bermuda-based insurance company set up in the weeks following September 11th that hasn't had to pay U.S. taxes since they opened their doors. Endurance Specialty was created to take advantage of the post-9/11 insurance market, which was surging with customers wanting to buy more property coverage after the terrorist attacks. Reports say Endurance was able to charge 300% to 400% higher rates on policies than before September 11th. Critics called it profiteering. And although it was a company founded by and run by Americans, Endurance Specialty was able to avoid paying U.S. income taxes by setting up shop in Bermuda. This new report cracks open the windows of Romney's past financial history. Joining me now is David Bernstein, political reporter for the Boston Phoenix. He broke the news about Romney's ties to Endurance Specialty today. David, thanks for being here.
Thanks for having me on.
Now, you write that Romney invested in a company called Golden Gate Capital. Tell us how they figure into this story with the company in Bermuda.
Yeah, Golden Gate was an investment firm created by former Bain Capital people. And this was during the time that Romney was at the Olympics. They left Bain Capital and formed Golden Gate. And they opened their first investment fund in early 2001. Bain Capital was a major investor in that fund, and Romney personally invested money in that fund. Now, presumably, if we believe that Romney had nothing to do with what was going on at Bain Capital, presumably that happened through separate paths and not, the same path. But they were both invested in this in Golden Gate. And Golden Gate was going to the idea was they were going to invest mostly in sort of high-tech California. They were located in San Francisco. But this opportunity, like you say, came along right after 9/11. There was this attempt to form, there were a number of these companies that tried to spring up. Endurance Specialty was one of them. The first organizational meeting started right after 9/11 in September, formally opened its doors in Bermuda in December. And so Romney, through Golden Gate, was an investor. Now Romney, and I spoke with someone with the Romney campaign who said, well, he invested in the fund, and then the people managing the fund decided to invest in that company, so that was not his decision. But it's worth pointing out that Romney continued to invest in Golden Gate on, and in fact, as of his last disclosure form filed last year, 2011, showed that he was invested in, I believe, 5 different Golden Gate investment vehicles with more than $2 million altogether. And so clearly he wasn't bothered by anything. He was going back and giving them more of his money. It sort of shows approval at the very least.
All right, so David, he and Bain, we presume separately, but invest in Golden Gate, who are guys that came out of Bain. They invest in this insurance company after 9/11 that makes a killing in layman's term after 9/11 based on the rising rates. And he continues investing in this firm even though he claims he didn't approve the investments. He continued to invest, and the last disclosures we have, it was $2 million in his 2011 disclosures.
Yeah, and the point you make about the taxes, it's important to note that a lot of these casualty insurance companies set up in Bermuda at the time, and still, to avoid taxes, and particularly Bermuda not only has no corporate tax, it has no capital gains tax. And for a company like that, a casualty insurance company, the way they work is they take in premiums from their customers and invest it because they only have to pay out money every once in a while. It's not like a health insurance company you're constantly paying out claims. They're collecting premiums, investing it, and making their money through investments. And then every once in a while, when a hurricane hits or something like that, that's when they have to pull a lot of that money out. So just to be clear, Romney was paying taxes on he was paying capital gains taxes, presumably,
right,
on his gains in value from his investment through Golden Gate. But the reason he was making gains is because the company they invested in was avoiding all of those taxes and able to make a lot of profit because they were not paying taxes.
So they made more money because the company did not have to pay the taxes.
And, of course, the United States was not collecting those taxes and so, was not gaining from that financially as a country.
And again, it's all right, it's fine and legal to make the money. But when you're running for president, we need to know how and what you did and where your values were. Thank you, David Bernstein from Boston, Phoenix. Great reporting. Thanks for your time.
My pleasure.
Coming up, Chris Christie's tough talk made him a Republican rock star. But did it cost him the job he really wanted? Big news today. And a day after Dick Cheney's pep talk against defense cuts, more GOP hypocrisy in Washington. Bonnie Franks is here, live. Stay with us.